Hi everyone, welcome to Leisrealtalk. It's Tuesday. I actually start on time today, so I'm very proud of myself for being on time. Well, thank you for being here on a Tuesday night or a Wednesday morning. We've been discussing China's financial crisis for some while, but it's been hard to quantify the scale of the crisis. Let's try to do that today. We know amid a real estate meltdown, high debt, and soaring unemployment, China's banks are facing the most significant fallout. Many of the banks are already bankrupt, but the Chinese government has been trying to keep them afloat for two reasons. One is to avoid paying the deposit insurance, which is 500,000 renminbi per account per bank. And then two, trying to minimize the risk of social unrest if banks were to shut down. So today, let's delve into the hidden truth of Chinese banks and understand why they're why they're already bankrupt. One, why we say the Chinese banks are already bankrupt, and two, how the Chinese government is hiding it or how they're able to fake it. So first things first, let's talk about why the banks are already bankrupt. So since Xi Jinping came to power in 2012, the Chinese government has been cutting interest rates to stimulate the economy. I have a chart to show you. Here it is. It has been going down. So the interest rate for 5 year and above, so kind of long term, bank loans dropped from 6.55% in 2012 to 4.65% in 2019, which was the year before the pandemic. When COVID became a public health crisis, CCP lowered interest rate further, and it's now at 3.95%. The rate cuts aim to encourage borrowing, investment, and spending, but it created a problem, which is unique to Chinese banks, and particularly smaller banks. The problem is they're losing money, and some have gone bankrupt. I'm not saying that cutting interest rates has caused smaller banks um, to go belly up. But in China's state-controlled economy, when the government tries to control everything, things can get out of control. So today I'll use official CCP data to illustrate the problem and to show why I say the banks are already bankrupt. In the banking industry, typically when loan interests go down, deposit rates also go down. Remember a few years ago when mortgage rates were between 3 to 4% in the US, interest rates for bank deposits were under 1%. I mean, they were just a fraction of a percent. They were like, what, a quarter of a percent? They were nothing. Banks attract deposits by offering depositors an interest and loan the money out at a higher rate. The difference between loan rates and um, the difference between loan interest rates and deposit interest rates is called net interest margin, or NIM, net interest margin. And this net interest margin is how banks make money. Now, the banking industry in China has a unique problem. While loan rates are being significantly cut, Chinese banks cannot cut rates on deposits. Or they cannot, I mean, they've cut rates, but they cannot cut rates proportionally. For instance, 1 year fixed deposit rate was 2.25% before COVID in 2019. It still stands at 1.9% now, even though the loan rate is cut to 3.95%. So the net interest margin in China is becoming narrower and narrower as the government cuts interest rates. And the reason that Chinese banks cannot cut deposit rate is unique to that market. If Chinese banks lower fixed deposit rate to around 1%. A multitude of financial institutions, such as the insurance and trust companies, or even black market banks, would offer 2% rate to attract deposits. And Chinese people will go over, because Chinese love to put their money in banks. So um, so the banks know that if they do lower the interest rate for deposits down to 1%, or even a fraction. Let's not talk about a fraction of 1%. Let's just talk about 1%. They will face a potential bank run. Therefore, Chinese banks are stuck in a situation in which loan interest rates are falling, while deposit rates have not decreased much. And this has caused the net interest margin, NIM, the difference between loan and deposit rates, rapidly narrowing. Nikkei Asia had an article on May 2nd that stated that 70% of China's listed banks have net interest margin falling below industry warning line. Okay, so 70% of China's listed banks have crossed the warning line, the warning threshold. Now, the critical issue is that the NIM has been the largest source of income for Chinese banks. Historically, this net interest margin has accounted for about 80% of Chinese banks' income. So, according to China's Financial Regulatory Bureau's data, I think the full name is it's called National Financial Regulatory Administration, right? That's the name of the organization. So, according to that organization's data, the number was 80.07% at the end of 2023. So 80% of Chinese banks' income comes from this interest, their interest income. They come from this what do you call that? Net interest margin, right? That contributed 80% of Chinese banks' income. So in another word, the level of net interest margin determines the bottom line of Chinese banks. And income generated through this net interest margin covers things like salaries and administrative costs of banks. And the industry average is 0.3% of its net asset. So so you spend 0.3% of your total asset under management, or total. I mean, there's a difference between asset under management versus net deposits. But for banks, most of its assets are deposits. So 0.3% of that is how much you can spend on salaries and administrative costs. Besides that, this income also goes towards offsetting losses from non-performing loans. Banks are measured by the non-performing loan ratio, a percentage of loans that are not good, that are bad. So here's the math. So I'm going to do a math. If the sum of this 0.3% administrative cost and non-performing loan ratio, or NPL, is greater than the bank's net interest margin, that means the bank is losing money, right? So if the administrative cost and then the ratio of non-performing loan exceeds your net interest margin, that means the bank is losing money. So, for example, I'll just give you some real numbers so you can follow me. So, if non-performing loan ratio, let's say for a bank, is 2%, this bank should have a minimum of 2.3% of a net interest margin to be profitable because it needs to cover the 0.3% interest for administrative cost. So 2.3% of a net interest margin is the minimum required if a bank has a 2% non-performing loan ratio. So that's just the math. Now let's look at China's official data. Now I'm going to present you real numbers. Let's make this bigger. So these are numbers from the China's National Financial Regulatory Administration. So as of the first quarter of 2024, the overall net interest margin in the banking sector was 1.54%, while non-performing loan ratio was 1.59%, resulting in a negative margin of 0.05%. So this is the first time the official data is in the red in the past 4 or 5 years. And this is even before we add in the 0.3% of the management cost. So if you include the management cost, the actual loss is 0.35%, right? Now, it's important to know that these official figures are have been, they're not real, because if you look at the numbers I circled in red, the non-performing loan ratio for the past couple of years have been declining, which is impossible. We know China's real estate sector has been having so much debt problems. Evergrande alone has a debt of 2.4 trillion yuan, and the real estate sector, the total amount of bad debts in the real estate sector can total 200 trillion yuan. So, by the way, China's the non-performing. People don't trust the official numbers, right? But the real non-performing loan ratio in Chinese banks has been a mystery. It's something that people have been debated and studied and trying to figure out the real ratio, but there hasn't been there has been no authority stating what the real number is. But we know this number is off because it could not be going down from 2019. If anything, it should have going up. So by saying that, so now if, let's say, we can normalize this, so this is my attempt to trying to normalize this. So let's say the non-performing loan ratio is 2%. Just to going with the assumption that the trend is not going down, it's going up, right? So let's say it's 2%, and then the profit margin loss is 0.46%. And then you add in the 0.3% admin cost, you have a 0.76% total profit margin loss. Now, here's another factor that needs to be considered. It's called money multiplier. Our deposited money is not loaned out just once, and it goes through the process of lending and relending repeatedly. And so this amplifies depositor the losses, right? So China's current money multiplier is 7.14, which is very high. I checked, the US multiplier is 1.2. Historically, the highest that the United States ever had was 3.4%, around 3%. So this is incredibly high. So if you take that multiplied by 0.76%, we get a 5.43% profit margin loss for Chinese banks. It means that based on official data, with some minor tweaking on the non-performing loan ratio, Chinese banks are losing 5.43% of its deposits annually because its costs exceeds its revenue due to low net interest margin and high bad loan ratio. Okay, so now let's look at the various types of banks and quantifying the problem for each one of them. And before that, let's talk about the 4 types of commercial banks in China. The first is the state-owned commercial banks, which is called the Big Four, right? They're the Industrial and Commercial Bank of China, China Construction Bank, Agricultural Bank of China, and Bank of China. And then the second category is called joint stock commercial banks. These are partially state-owned, and they include banks like China Merchants Bank, CITIC Bank, and also Shanghai Pudong Development Bank, so on and so forth. There are like 12 of them in this category. So they are the larger banks of China. Let's take a look at their numbers. Okay, so same analysis. So according to official data, they maintain a slightly profitable profile in the first quarter of 2024 with gross profit margin of 0.2% and 0.37% respectively, barely covering management costs. However, this masks the fact that their bad debt data is not transparent. The real estate loans are as significant as those of other banks. So their non-performing loan ratio should not have shown a downward trend in the past 4 years. Actually, 5 years. It should show an uptick trend. Sorry. So we know, the numbers are not real. So if you normalize the numbers based on a similar exercise, we know that the largest banks in China also suffer a loss annually. There's no way that they can be profitable. But without boring you with too much detail, I did not bother to calculate that. But these numbers, show us that if we normalize the non-performing loans ratio and if we add in the management cost, they are losing money. Okay, I want to put your focus on the next category because they are a bag of problems. They are China's city commercial banks and rural commercial banks. The city commercial banks are smaller banks operating within specific cities, such as the Bank of Beijing and Bank of Shanghai. They're regional smaller banks, and they're controlled by the local governments. And the rural commercial banks are also the smaller banks serving rural areas, and they're controlled by the it's called provincial rural credit cooperatives. Now they are not doing well. So if you just without any adjustments, the official numbers already show a gross margin loss, right? And then if you apply the 3.3% of management cost, and if you adjust slightly the non-performing loan ratio, and if you multiply the 7.15% money multiplier, so if you make all of those adjustments, city commercial banks have a negative profit margin of almost 10%, meaning that they lose 10% of its portfolio, of its deposits annually. And then the rural commercial banks' annual loss is 18.4%. That's significant. So, in summary, Chinese banks collectively are losing money, and even the state-controlled banks are. And if we replace our conservative estimates of bad loan ratio with more aggressive estimates, the bleeding is even more severe. This is because we only adjusted the NPL ratio by, you know, 20%, 20 to 30%. Some experts estimate Chinese banks' NPL ratio is between 5% to 20%. That's 4 to 10 times higher than the official data. So I, I didn't go into that route because I didn't have time today to verify these claims. Those of you who are in this business or in this profession can do the calculation using the real estimates of Chinese banks' non-performing loan ratio to come up with a real number. So with all that said, then our next question is, well, if Chinese banks are already bankrupt, how do they remain open? So now let's talk about the hidden truth of Chinese banks. Now, banks have lots of money, but banks don't own any of it. Its assets are our deposits. Banks cannot afford any losses because any losses are losses to customers' deposits. However, as long as customers don't take out the money on a large scale, or in other words, as long as a bank run doesn't happen, banks have enough money to handle day-to-day operations. And the only reason Chinese banks have stayed afloat is that its authoritarian government has issued stringent rules on when and how people can take out money. And this has prevented Chinese banks from collapsing. About a week ago, a woman posted a video on social media stating that her mother, carrying a bank card and ID, went to Jilin Bank in Changchun to withdraw money, only to be told by the bank that police approval was required. And this woman explained that her mother wanted to transfer the money from Jilin Bank to another bank because the latter offered higher interest rate. By the way, Chinese people are very sensitive to interest rates. I said earlier that if the banks lower the interest rate to like 1%, they're gonna have a bank run because they even for like a fraction of a percent, Chinese will move their money from one bank to another to take advantage of the slightly higher interest rate. So this woman, was told that she needs police approval. And ultimately, after a long wait, the police granted the transaction, and so she was able to move the money. But this was when trending on Chinese social media because people were surprised to hear that you need local police to be involved when you want to move money between, two financial institutions. So it got the attention of Chinese media. And the next day, the Chinese media went to interview these people. A staff member at the branch of the bank told reporters that withdrawals above 20,000 yuan, which is about 3,000 US dollars, that's about 28. Less than 3,000 US dollars, about 2,700 US dollars. So withdrawals above that amount needs to be approved by local police station. So somebody from the bank confirmed that. And a staff member from the local police station also confirmed that residents with bank withdrawal needs must explain the purpose and details to the bank, which will then submit the information to local police station for verification before processing. I think they are sending the approval to the local police station that manages this customer. It's not the local police station of where the bank is. It's the local police station responsible for this resident or for this customer. So depending on where you live, then the bank needs to forward the application to your local police station. And additionally, so this triggered Chinese media to search for more. And then Chinese media find out that in one of China's most affluent cities, Shenzhen, advance appointments are required for withdrawals over 50,000 yuan. Large withdrawals also require proof of actual use. You need to provide information to the bank to tell them what you're going to use the funds for. And staff at the Beijing Bank, Industrial Bank, and China Everbright Bank branches in Shenzhen, so these are the local branches of these larger banks, said that the advance appointment is to prevent large withdrawals from causing a shortage of cash at the counter. You wonder why a bank will run out of cash, right? A staff member at Shenzhen Rural Commercial Bank said that withdrawal over 100,000 yuan, for any withdrawals over 100,000 yuan, the bank would review the customer's recent transaction history before approving the request. So it means that large withdrawals are subject to both the bank and local police approval, not just the police, but if the local banks determine that, well, you have never had large transactions, and now all of a sudden you want to send 50,000 yuan to someone, they can deny your request. So it's subject of a subject of approval by both bank and police. And I did a little bit of research and found that police approval for bank transactions actually started earlier at the end of Q4 in 2023. We didn't hear about it because it was not it was not on social media, or it might be because it has been removed. So we didn't hear about it until recently. And here's a form to request large withdrawal. So in addition to name, address, and your identity, you also need to provide the source of your money, where you got the money from in your bank, and how you plan to use the money. And then any withdrawal over 50,000 yuan and under 100,000 needs to be approved by the bank's retail lobby manager. I think the person who manages the lobby, the retail lobby of the bank, of the branch. And withdrawal over 100,000 needs 4 signatures. Okay, they include the lobby manager, personal banking manager of that branch, the head of the personal banking of the branch, and the chief and the person in charge of the operations of that branch. All 4 signatures are required if you want to withdraw 100,000 yuan or more. I think it will be more and more difficult for Chinese to get their money out. In the past year or 2 years, we've seen family members unable to access money left by their deceased loved ones. This is because Chinese banks require facial recognition verification. And this process, this step, has caused a lot of trouble for people dealing with bank accounts belonging to their deceased family members, because the person is gone. You can't do face recognition. And for that reason, sometimes the banks just don't give you the money. They use some kind of excuses to deny you access to the money. Because of these stringent controls, I think the large banks might survive for a few more years, but the city and rural commercial banks are unsustainable and could collapse in a year or so. Recently, some of the smaller rural banks have been merged with larger Chinese banks. I think this may be one of the solutions by Beijing trying to solve the problem, right? By merging smaller rural banks with the larger ones. But the problem isn't going away. No matter how you consolidate the banks, the problem goes from one pocket to another. Some people asked if increasing interest rates would solve the problem. Technically, I mean, theoretically, it would, but I don't think Beijing will increase interest rates because, given the condition of China's economy right now and the performance of its stock markets, I don't think increasing interest rates would would be would be would be good. I mean, it could cause other problems. So. Um, that's all I have for today. Like I said, we knew that there is a financial crisis in China, but we were not able to quantify it. Hopefully, with these numbers, um, we're able to quantify the scale of the problem. I mean, I'm using the official data, and I mean, they're not they are the official number, but they already show that the banks are in big troubles. So if those of you who are in this industry or in this profession, you have access to more information and more studies done by other professionals, and maybe you can do this. You can quantify the scale of the problem more accurately than I do. So that's all I will say. Okay, that's a lot of numbers. Okay, let's see. Have I made everyone fall asleep? Okay. Um, let's see. Somebody say, I thought she would be on a few minutes delay. Oh no, not today. Lay's getting better. Lei is seriously trying to be punctual. All right, I'm glad I did it today. Let me see. All right. Any questions? Oh, by the way, did you guys hear about the attack on the Japanese mother and her young child in Suzhou? I mean, it's sad that it happened 2 weeks after the attack on the Americans, and it's similar style attack, knife attack. So, um, I mean, I was preparing for this, so I wasn't able to talk about that. But let's see if I have time tomorrow to talk about it, because it's a dangerous trend that's happening in China, and if we don't do something about it, it can get out of control. Judging by how things are going in China right now, so maybe I'll talk about it tomorrow. If not, definitely Thursday. Um, let's see. Any questions? Somebody asked me, um, hearing about the layoffs spiraling in banks in China, is it indicative of hidden inflation and stagflation? And why are no experts reporting it? Good question. Yeah. Bank employees have been asked to pay. They are forced to take pay cuts, and some of the pay cuts are very substantial. I mean, they're getting, like, in some cases, half of what they used to get. So it's a substantial cut. And also, they have to do more because they might have laid some people off. So fewer people, who make less money but do more work. So people are not happy. Um, so yes. So all right, Jeff Ramos, CCP changed the rules. No, deposit are no longer securitized, guaranteed deposits. Well, officially, they didn't say they changed the rules, but do you think CCP will, you know, compensate people for 500,000 up to 500,000 yuan per account per bank? There's no way. That's why they try to keep these banks alive. They don't say these banks are bankrupt, but they are. Take a look at this, the smaller commercial banks. They are already bankrupt, but but because it's authoritarian government, it can just stop people from going to the banks, stop people from using their money, um, or using a lot of its money, their money, to keep the bank afloat. So they don't want to say the banks are bankrupt. Um, they're using administrative means to keep the banks open. That's what it is. Pete, does the dollar to yuan exchange rate also affect the bank solvency? Um, Technically it does, but it has not fluctuated. Well, actually, the Chinese government has started intentionally devalue yuan. I mean, the central bank has cut down the median point of the rate, gradually. I mean, it has successively lowered the rates. So I think the Chinese government is trying to devalue yuan to boost exports. But it will make everything more expensive when it buys, for imports. But China's imports have been going down. Maybe the CCP has already stocked up everything it needs to stock up, during the pandemic, and it's now it stopped its buying spree. Um, um, Sean Rice, Winston, yeah, I know who you're talking about. Lao Wai 88, Lao Wai 86 calls it killing season. Yeah, it is. Brian Smith, Chinese underground banks are laundering drugs and weapons money around the world. Yep, I've heard about it. Agent Otaku, can she just print more money and generate digital money to fix this bank money problem and not report it to not trigger inflation? He's meeting a lot of resistance. Of course, he wants to push digital currency so the paper money becomes obsolete, right? And then he can track with digital currency, it can track everything or every transaction. But he has met with a lot of resistance because think about all these corrupt officials. Their money, the money they embezzled, are in real cash. They're when they are ransacked, the cash they hide at home are weighed in like tons. They're like tons of cash. So these people, these paper money will all become obsolete if he implements digital currency. So no way, there's no way Chinese officials would go with that. So he's met with a lot of resistance from within the system. Um, let's see. Jeff Ramos, 1 trillion yuan printed every 23 days since 2019. You called it in previous episode. That's true. Matthew is Lawai 86. Okay. I got their names mixed up. Yeah, Winston and Matthew. Okay. Oh, I want to talk about when the Russian ruble devalued significantly like a week ago when they announced remember a week ago when the US announced further sanctions on Russian banks, and then the Russian announced that they would stop settling the transactions with dollars. The Russian ruble, the exchange rate, the black market exchange rate for ruble was what, $1 to 400 rubles in the black market in Russia. and somehow the Chinese yuan, uh, but ruble against yuan uh, appreciated. So, like if you go, like the indirect exchange rate uh, between dollar and ruble, if you go through the Chinese renminbi, is $1 to 80 ruble, because $1 will be was $1 will get 7 renminbi, and then each renminbi will get 11 rubles at the time. So that means it's 80. If you have $1, you get 80 ruble in China. And some Chinese was saying that it's some people can make money this way, if they have, if they have one, if they have $1, if they have $1 and they could get 400 ruble in Russia, and then they bring the 400 ruble to China, convert it to renminbi, and then convert it to dollar, they get $4. So they make money. They make $4 out of one. I mean, that's a theoretical assumption. I mean, technically, it's probably very difficult to do because of all the sanctions. But I see Chinese talking about it. I thought that was interesting. All right, that's all for today. I will seek the truth. Lei, what will happen if Chinese banks are cut off from the SWIFT system? Impacts, fallouts? Of course, it will be disaster. Basically, that's a complete decoupling. Um, I don't know if the United States um, is ready to cut China off. I mean, if China invades Taiwan, I mean, that's more likely to happen. But before that, I don't think the United States will cut Chinese banks from the SWIFT system. I mean, with the things that's going, I don't think I don't think that's going to happen. So, but with if a war happens in the Taiwan Strait, then it's a different story. Then it's that complete. It's completely it's annihilating. It's just yeah. It will wipe out the Chinese economy. All right, Sean Rice. What did most countries do when the wealth of a newly created middle class was threatened and then wiped out? Is that enough to cause China's newly impoverished to do more than revolt? What did most countries do when the wealth of a newly created middle class was threatened and then wiped out? Revolution? Um, is that enough to cause China's newly impoverished to do more than? It's hard to revolt in China because of digital surveillance. The government controls through like WeChat and these super apps that the Chinese use. It's very difficult for the Chinese to get organized. They use, you know, I mean, the police will already talk to you if you say something, and the algorithm and AI figure out that you're someone dangerous. A red flag is raised, and then the police will call you or talk to you. So it's very difficult with tech. Unfortunately, the CCP has the technology, um, to give every person a digital handcuff, and so revolting is difficult in China now. All right. Lao White 86 has said that China has become a giant North Korea. Slightly different. They're still different. Um, I think North Korea. I mean, they're similar. I mean that statement is true, but China and North Korea are still different, right? Because no, I mean there are power struggles in each country, but North Korea at least the political system is stable because it's hereditary. I mean, the power is passed down from the grandfather to the father, now to the grandson, and in the future it will be passed down to his daughter. So people have already accepted that, and although people don't like the regime because they're living their life quality is terrible, but at least it's a system that's not disputed. However, in China, it's different because Xi Jinping's power is not stable, right? So all of his internal adversaries are challenging him. Why are you in charge and ruling over us? Your father ranked lower than my father. So CCP does not have a system in place that manages power transitions. So every time so it's always, they have to go through brutal internal um, power struggles or even coup d'état for the next leader to seize power. And this is something North Korea doesn't have. And this makes CCP, the regime, more fragile and more deadly than North Korea. And there are other differences, but I just want to point that out. Because people, I mean, other princelings are challenging Xi Jinping. Why are you telling us what to do? Who give you? It didn't come from your father, and and he doesn't. I mean, unlike Mao Zedong or Deng Xiaoping, whose personal charisma or their popularity within the leadership is there. I mean, they get, they're able to build consensus, or at least get themselves established among the top echelon within the party. But Xi Jinping has failed to do that, so he's meeting a lot of challenges, and this is deadly. This is the biggest challenge to the regime, to the Chinese leader right now. But you don't necessarily have that in North Korea. So in a way, the regime in North Korea is more stable than the Chinese regime. All right, that's all I will say today. Hopefully, I'll see you tomorrow if I could do my schedule, plan my schedule well to do a program on the recent stabbing of the Japanese mother and her child. If not, I'll see you on Thursday. Thank you. Bye bye.